Hey there! Welcome back to Crypto News, your go-to YouTube channel for everything buzzing in the world of cryptocurrency. Before we dive in, don't forget to smash that like button and hit subscribe. It really helps us bring you daily crypto updates and deep dives into the trends that move the markets. Today we're covering some incredible news: record-breaking crypto fund inflows, a major Bitcoin and Ethereum rally, a shocking crypto kidnapping case in New York, technical indicators that could point to even more gains, and key developments around crypto regulation in the US. Stay tuned, because this is an episode you don't want to miss. Let's kick things off with some big news in the investment space. Crypto funds have just hit a historic milestone, with assets under management surging to an all-time high of $167 billion this past month. That's thanks to a whopping $7 billion in net inflows, marking the biggest monthly intake we've seen since last December. This influx signals that more and more investors, especially institutional ones, are viewing crypto not just as a speculative bet, but as a legitimate hedge against market uncertainty. While traditional equity funds saw billions in outflows and gold funds experienced their first outflows in over a year, crypto funds were busy raking in capital. Bitcoin-focused funds attracted about $5.5 billion, while Ether-based funds brought in nearly $900 million. That's a huge vote of confidence for crypto as an asset class. It's also worth noting that a lot of these inflows are coming from investors looking to diversify their portfolios amid concerns about the dollar and bond yields. This trend is a major sign of maturity for the market, showing that crypto is no longer just a fringe asset, but a staple in diversified portfolios. Let's see how that translates to price action next. Now let's talk about price action. Bitcoin is currently trading just under its all-time high, hovering around $109,600 to $110,000. This rally is being fueled by optimism ahead of the latest US inflation data, specifically the Consumer Price Index, or CPI. Investors are watching closely because if CPI comes in higher than expected, say around 2.5% instead of the 2.3% we saw last month, it could put pressure on the Federal Reserve to hold off on rate cuts. That could, in turn, impact risk assets like crypto. But for now, the momentum remains strong. Technical analysts point out that Bitcoin hasn't triggered any major sell signals yet, which suggests the door is open for a push towards the 112,000 to 120,000 range if inflation surprises on the low side. Ethereum, meanwhile, is also on the move. It's trading between $2,760 and $2,800, with a 4 to 5% gain today alone. There's been a surge of investor interest as traders rotate into altcoins ahead of the CPI release. Ethereum's recent breakout above $2,760 was confirmed by a bullish golden cross pattern, where the 50-day moving average crosses above the 200-day moving average. This is often seen as a strong technical signal that more upside could be on the way. The Relative Strength Index, or RSI, is sitting around 62, which leaves plenty of room for further gains toward the $3,000 mark. This combination of bullish technicals and strong investor flows suggests that both Bitcoin and Ethereum could be gearing up for another leg higher, assuming the macroeconomic picture cooperates. Let's not forget about the altcoin market, which is also heating up. Solana has seen a solid 5% gain today, and some smaller tokens are up as much as 8% as traders prepare for the CPI data release. One standout is Cosmos, Atom, which recently bounced off a key support zone at $4.50, signaling that whale investors might be accumulating. This is exactly the kind of move that can spark momentum across the altcoin space. There's also growing chatter about an Altcoin ETF Summer. Traders are buzzing that we could see a wave of new exchange-traded funds focusing on altcoins, similar to what we've seen with Bitcoin and Ethereum. This would mark another step toward mainstream adoption of crypto beyond the top two coins. If that happens, it could unleash even more capital into the broader market, fueling a sustained altcoin rally that might carry well into the second half of the year. On the policy front, the US government has been making big moves in the crypto space. The current administration has taken a more favorable stance on digital assets compared to previous years. Earlier this year, the government established a strategic Bitcoin reserve, alongside a broader digital asset stockpile. This reserve consolidates seized cryptocurrency assets, potentially worth up to 200,000 BTC, to be held as reserve assets rather than sold off. Regulators have also paused many of their more aggressive enforcement actions, including shutting down certain crypto enforcement units. This signals a friendlier regulatory environment and suggests that the government is looking to support crypto innovation rather than stifle it. The administration also appointed a crypto czar and launched a presidential working group on digital asset markets. They even hosted a White House crypto summit earlier this year, making it clear that digital assets are now seen as a key part of the U.S. financial system. All of these moves have big implications for the market, boosting institutional confidence and paving the way for more capital inflows and exchange listings. It's a big deal for the industry, and it could be a catalyst for further price growth. Let's talk about the exchanges. One of the biggest stories right now is the news that Bullish, built by Block One and backed by Peter Thiel, has confidentially filed for a U.S. IPO. Although details are still under wraps, this move shows that exchanges are increasingly looking to public markets as the next big growth opportunity. It also highlights the growing confidence that crypto businesses have in the regulatory environment, especially as policymakers signal support for innovation. If Bullish goes public successfully, it could pave the way for other exchanges to follow, adding even more legitimacy to the industry. It's definitely a story to keep an eye on. Unfortunately, it's not all good news. In New York City, a shocking case of crypto-related crime is unfolding. Two men, John Woltz and William Duplessis, were in court today, facing charges of kidnapping, torture, and assault. Authorities allege that the pair abducted a 28-year-old Italian crypto trader on May 6th and held him captive in a Manhattan townhouse for nearly 3 weeks. Reports say they tortured the victim using electric shocks, beatings, and threats, demanding that he hand over his Bitcoin wallet password. New details from the courtroom paint a terrifying picture. Prosecutors say the suspects may have held 2 other victims at separate locations, adding to the severity of the case. One particularly disturbing detail involves an alleged incident where they tried to set the victim on fire using tequila, but fortunately, he escaped with no serious burns after flagging down a traffic cop on May 23rd. Both suspects are being held without bail, and their next court appearance is scheduled for July 15th. This case is a stark reminder of the very real risks associated with holding significant amounts of cryptocurrency, and why it's so important to keep your private keys and recovery phrases secure. This tragic story underscores that while crypto offers freedom and opportunity, it also comes with new challenges, especially when it comes to protecting your assets. Now let's switch gears to technical analysis and community sentiment. Across Reddit and Twitter, crypto sentiment is extremely bullish right now. Traders are excited about the surge in fund flows, strong price action, and the possibility of new ETF launches. People are asking, is this the start of a bigger breakout? On the technical side, Bitcoin hasn't triggered any major reversal signals yet, with most indicators still in bullish territory. Meanwhile, Ethereum's recent golden cross and strong breakout above 2,760 have traders eyeing that 3,000 level as the next big target. This is the kind of setup that often leads to sustained rallies, especially if broader economic data, like the CPI, cooperates. Overall, the mood in the crypto community is optimistic, and technical indicators are supporting that sentiment. So, what's the outlook from here? All signs point to a bullish alignment. We've got record fund inflows, strong technical signals, and supportive policy developments. Bitcoin looks poised to test the $112,000 to $120,000 range, while Ethereum could aim for that psychological $3,000 mark. Altcoins are also showing promise, with several smaller tokens gaining traction thanks to investor rotation and possible ETF announcements. For long-term investors, this could be a good time to add on dips, say around $105,000 for Bitcoin or $2,700 for Ethereum. Swing traders should keep an eye on tokens like Solana, Cosmos, and XRP, which could post 10 to 20% rallies on technical breakouts. Of course, risks remain. Watch out for CPI data. It could spark volatility. And always remember to manage risk by setting stops below key support zones and taking profits along the way. Stay sharp and stay safe out there. That wraps up today's crypto rundown. The market's on fire, institutions are buying, and regulations are shifting, but always be aware of the risks. Which coins are you watching? Drop your thoughts in the comments. Smash that like button, subscribe, and hit the notification bell.